lately. The economy's still pretty good. You think we could talk ourselves into a recession?
Yeah, it's always possible. I remember the last recession. Remember, people did internet searches of the word recession to see how many hits it got and how much the talk was about recession. I tell you, almost everyone's extremely worried. It's not just recession, it's what is the bond market telling you? And there's many people, some of our customers over in Asia, that are very afraid that negative rates have hit Europe, Japan. Is it coming here to the United States? That's a question I get a lot.
Well, the other question, I think there's really just one question in the bond market, which is a 1.5% 10-year yield here and 15 trillion in negative yield, is that signal, and an inversion, is that signaling a recession, or is it simply signaling that a lot of people are interested in buying treasuries and it's not this great recession indicator like it has been in the past?
Yeah, it's possible. I mean, don't forget, it's always thought, and Fed officials think this, that a lot of money is coming in from these lower yielding bond countries, and it's coming here to the U.S. But, you know, if they're over domiciled overseas, they have foreign exchange risk, right? I mean, that's always the issue. I don't know how much a flood of money is coming in. But yeah, I had to laugh, or I don't know if laugh is correct. Remember on August 15th, stock market drops 800 points. Trump is tweeting crazy inverted yield curve. Well, the curve, it stopped inverting back there then August 15th. All last week, the curve was inverted. 2-year notes to 10-year bonds. And did you hear a peep? Maybe one day, a couple hours last week. The curve is inverted again. How come we're not screaming about recession?
Well, because we've never had this level of negative yielding debt, to your point. So maybe the buying is technical rather than simply some recession indicator. But isn't it true? And I think this is an important point. Just because the yield curve is inverted doesn't mean recession. Isn't it more important how long it's inverted rather than the fact that it's now been inverted by 1 or 2 basis points for a couple weeks?
Well, you have to wonder about it. The last signal we got, 3-month bills to bonds, before the 2007-2009 recession. When did the signal indicate flash recession? 16 months in advance. I mean, is that an indicator? I mean, it's a year. You have a year and a half to get your affairs in order. So what's really important, I think, in the inversion is credit still being supplied to the economy? The thought is when the curve inverts, banks will stop lending. Right now, banks have not stopped lending.
No, they haven't.
So,
and Americans haven't stopped borrowing. And we're seeing, refinancing obviously is up. Our audience, CNBC, we've got the wealthiest audience in the world, right? So we've got people, financial professionals that are watching this program all day long. And we love you for it, by the way. But I wonder if out there in the United States, and I get out there as much as anybody else, I think, if anybody's saying, hey, Myrna, don't buy those jeans, don't buy that car, Bubba, because the yield curve is inverted. I don't think anybody's saying that. And I wonder if all the stuff we're seeing in the bond market is not going to trickle down to the U.S. consumer yet, if ever.
Yeah, I mean, well, part of it is it's the worry about the trade uncertainty, right? And those tariffs don't really get completely on. I mean, the real drag on the economy would be if the tariffs go to 30% on $540 billion, which, by the way, it's running $475 billion this year. We've already cut back on our imports due to the tariffs. So once we get up to full force tariffs, 30%, maybe you have an issue for the economy where there's a substantial drag on growth. Yeah. But that's a good 6 months away.